The Kenya Revenue Authority has issued a public notice reminding taxpayers that filing of 2025 income tax returns is still ongoing and must be completed by 30th June 2026, or else you'll face a default assessment filing return. So let's break down the key points that you need to know. So this reminder applies to everyone with a KRA PIN. Even if you are a student or currently have no income, it is very important to know that you must file your returns. So check your filing obligations and stay compliant before the deadline. So once again, the deadline for filing your 2025 income tax returns is 30th June 2026. So filing early helps you avoid errors, system delays, because definitely at the end of the month, there will be system delays and also the last minute stress. Now, regarding the claiming of expenses, for the year 2025, KRA has confirmed that taxpayers can still claim the legitimate business expenses even where they are not supported by eTIMS or TIMS invoices during filing. However, these claims remain subject to verification by KRA after the filing season. So I've done a step-by-step guide how you should involve and include the non-eTIMS expenses as provided by KRA. I will send the link in the description or in the comments below so that you can follow it and file your returns. So Kenya Revenue Authority has also mentioned some changes for the year 2026. So while 2025 offers some flexibility, stricter rules will apply for the year 2026. So all income and expenses, especially expenses, they will need to be supported by valid electronic tax invoices generated through the eTIMS or TIMS. It's very important to start preparing early, register for eTIMS, and also request for an eTIMS receipt anytime that you incur a business expense or you make a business purchase. Now, this is the warning from KRA, and this is the most important part that you want to get. So KRA has warned that taxpayers who fail to file their returns by 30th June 2026, they will be subjected to default assessments under the Tax Procedures Act. So take note of that. So what is a default assessment? A default assessment happens when KRA estimates your tax because you did not file your returns. They rely on information already available in their system, such as withholding tax records, VAT sales linked to your KRA PIN number, bank and M-Pesa transactions, employer payee records, or even some import data. So this means that your tax is not based on what you declare, but it is based on what KRA can see. So they will file automatically for you, and that can trigger some other limitations that I will share next. So if KRA files a default assessment for you, it can work against you in several ways. These are just some examples. So KRA may rely on incomplete or incorrect information, which means that your actual financial position may not be fully captured or may be captured wrongly. I have seen a case like that. Someone was done a default assessment and he was put the amount of sales that they put on his account, he didn't make such a sale. So it was incorrectly done, and correcting that becomes a very long process. You also lose the chance to properly claim your allowable expenses because KRA don't have that information unless the expenses are on eTIMS. But if they're not on eTIMS, those which are not on eTIMS, you lose the chance to claim them, meaning you could be taxed on your gross income instead of your real profit. Remember, you're supposed to be taxed on profit if you're a business person, not on your income. But in this case, they will tax on your income. So this often leads to higher tax than what you would have paid if you had the filing done correctly by you or by a tax consultant. So, and even if you try to challenge it later, the process can take time, and there is also no guarantee that you will fully reverse that tax. So what should you do as a taxpayer? First, confirm exactly which type of income that you are supposed, or the type of return you are supposed to file. And then take some time to sort out your records and keep proper breakdown of your income and your expenses. And then once you're ready, you can file, or you can ask your tax consultant to file for you, and avoid the last minute rush, because the KRA system often slows down towards the end of the month. From the 25th to 30th, the KRA system always slows down. So it's very advisable to file early. So my message is very simple today. File your 2025 income tax returns before 30th June 2026 and start preparing for stricter eTIMS requirements going forward. So don't wait for KRA to enforce the filing. Make the filing yourself. This is not the year that you assume tax filing. Okay, so make sure you do that on time and also prepare your eTIMS requirements going forward. And that is it for today. So if you need help with your tax filing, online eTIMS registration, eTIMS invoicing, bookkeeping, or accounting support, feel free to reach out. We are ready to assist you. The contact details are in the description and pinned in the comments below. Remember to subscribe so you don't miss on our upcoming educational videos. Thanks for watching and see you in the next one.